What if we had an 8% interest rate hike? Let's have a look. Hello everyone, Florian Heise here, and welcome to another episode of HeiseSays. Grab your stein of coffee and, well, a viewer left a comment. Gary left this comment and I thought, you know what, this will be a good idea for an episode. So, Heise, and it's actually Heise, can you do a comparison payment on 8%, on 3% versus 8%? May happen in the next few years. It's a problem when you're typing on your phone. That would really up the mortgage payments on big loans. And I thought, you know what, that's really interesting. We should have a look at that because he's commenting on a video where the RBA are arguing that people are in a decent enough position when it comes to mortgage repayments and interest rates going up. Now let's jump over here and have a look. This is from Orange Mortgage and Finance Brokers, and we can see variable rates, in 1st of March 2021, 4.52%. Now, if we go back in time, just up here to 2011, we had over 7%, 7.79. We had a bit of a dip in 2009 after the GFC, but just before that hit, September, we were at 9.36%. Variable rates on a mortgage. Can you imagine that, everyone? If we keep going back in time, we're down to 6% in 2001. 2000, we're at 7%, climbing up to 8%. 8%. Okay, our cash rate is at 0.1. 3%, which isn't even on this chart, 3% for the cash rate, was considered an emergency rate, guys. So we keep going further back. In the mid-90s, we had 10%. 10% interest rates on your mortgage in 95. Wow, just think about that. We'll have a look at the differences in repayments. There it goes, back, right to the 90s. 1990, variable rate, 1st of January. 89, 1st of November, 17%. Do you remember that? 17%, everyone. I was a kid then. That was just when we sold up and we moved to Queensland. We can see here it was down 14%, 15%, 12, 10, and you go all the way down back to 5%. So even if we hit this level here, that's going to have an impact. But you don't want this insanity. Look at this insanity here. It is just such a mess. So I thought what we'd do, let's have a look at some different rates. So here we have, this is the latest increase for CommBank for one of their fixed rates, was 3.39%. And let's play the game of, let's say it increases to May 1st, 5.37%. Let's just pretend. Okay? So the rates are up to 5.37%. Okay, now we're not talking that far back. Well, we are actually. We're talking 2011. So 10-year rates. That's an increase in interest of not that much, about 2%. But the difference in the amount that people have to pay per month is $677. So that's a 26.35% increase in the repayment that they have to do. Now we're talking some serious money, everyone. Now, could we have such a drastic increase in a short period of time? Well, if we have a look at this chart, you may, hang on, we're talking 2%. So there we went from 1st of July 94, and in 95, 1st of April, it went up from 8.75 to 10.56. So about a year. Have a look here. 8%, 1st of December, up to 9.6 in August the 1st, 2008. So there you go. About a year. So you could see a decent increase in a year's time of 2%. That's not that big an amount, but guys, it would have an increase here on the cost. Now let's play this game again. What about 9.62%? Okay, so we'll change this to 5. Oh no, we'll leave it. We'll do it 9.62%. So the increase from 3.3% now to 9.26%. That's going to increase your monthly costs of mortgage repayments by 91%. Now, if we get to that point That's going to have a huge impact on people. Could you handle a 91% increase in your mortgage repayments? I mean, if we have a look here, people have made prepayments. They've got liquidity buffers. But here's the thing. It may look scary, but those high rates, they peaked. They didn't last very long. Even the big mama, 17%. What do we have? June 89 to March 1990. There you go. So, yeah, not that long. You just need to run it out. What about, we won't go there first. We'll have a look at this one. What do we have in here? We've done 9%. We'll go up to 15%. 15.5%. Okay. 15.50. Now a mortgage, which is costing you $2,568. If we go back in time to the mid-'80s, you would be paying $7,566. That is a 194% increase on your repayments. Now, if we start to see this, then you'll see some real corrections in the property market. I would be shocked if this happened. I would be shocked if they let it ramp up to this stage. Because remember, it wasn't a smooth growth. It was a lot of up and down with the rate. They're trying to respond to the market. And, well, what government interventions would they do to address this? Hashtag mortgage keeper. But, yeah, I mean, that's nearly double what your initial payment is. Okay, that would wreck people. That would be really tough. People would be selling left, right, and center. It couldn't last very long. And then there'll be people swooping in to buy it up. So what about the big mama? Everyone's favorite interest rate to reflect back on. Good old 17%. 17%. Well, let's have a look. You ready? I'm going to have a shot of coffee before I press enter. Now, let us know in the comments if you lived through this and how you managed to survive it, guys. Okay. Oops, bit of a mathematical error there. Okay, it's 31,000 increase. Yeah, there we go. Okay, that's if the Bitcoin economy. Then your loan that now costs you $2,500 would cost you $8,200. So $5,700 more per month. A 221% increase. I mean, here's the thing. These insanely high interest rates, the amount that people had to borrow for housing was nowhere near what we're talking about now. So this would completely wreck the housing market. It would destroy the economy in Australia. It would be a complete nightmare. And I cannot see the Reserve Bank being so foolish to do this. They will intervene left, right, and center. People would be marching in the streets. These protests we've had recently have been nothing. Nothing compared to this. If you touch the sacred cow of housing in Australia, oh boy, that'll rile up the masses. More than anything. So guys, thanks for watching this episode. Check out this last video I did about interest rates rising. They're slowly creeping up. We're not seeing these insane, scary figures. This was just a bit of fun. Don't be worried. We're not going to see 17% interest rates anytime soon. Take care, guys, and I'll see you all next time. Bye for now.